Hello and welcome to the Hustle2Achieve podcast. This episode is going to be different because this is the very first time that we are having an in-person video interview. On today's episode, we have with us founder of Totality Corp, Anshul Rustaggi. He is a graduate from IIT, then he went to IIM, worked at one of the largest hedge funds in the world, started multiple businesses and is now working on building India's very first metaverse companies. Thank you for joining us today, Anshul, and welcome to the podcast.
Thank you. Thank you for having me here. It's a pleasure and excited for our conversation.
So, thank you for joining us. So, you went to IIT, then you went to IIM. But before you went to college, what was Anshul like in high school? Like, if we were friends in high school, what was Anshul like?
I think I was a very happy-go-lucky person. Like a lot of teachers used to say that he's very happy-go-lucky. I think I definitely had a goal and like I wanted to get to different places, but I've definitely been sort of a happy-go-lucky person for definitely the early part of my life. So that will probably be how I would describe myself. I used to love comics, wrestling, the WWE, really crazy about He-Man, the figurines, really crazy about games. Atari was the first console my dad got for me, and I think in general just like what most kids at least our age used to do, play a lot of gully cricket, play a lot of cricket, basketball, etc. So yeah, that's probably how I think most people would remember me from school.
So how did you studied from one of the finest institutions in the country, not just in the country, but one of the renowned institutions across the world, right? And both the institutions, both IIT and IIM. So how did they shape you in basically starting off your journey from there on to what you're currently doing?
Yeah, sure. So I think the shaping up of IIT. So I was lucky to get into IIT-Delhi, and I think the shaping begins when you start preparing for the JEE itself, right? So I started preparing for JEE from 11th. So I had a 2-year course. I used to go to FITGI. I also went to Vidya Mandir. These were the two largest sort of coaching institutes at that point of time. And my father is from IIT-Delhi. So I was really determined to get into IIT-Delhi as well. And thankfully I did. I think the way what you really are able to get after that is that if you have a particular goal, it gives you a discipline to sort of say that, look, you have to keep that discipline on, you have to keep that consistency on, and obviously achieving it gives you the confidence that that discipline, that consistency is going to get you the results. So I think the major thing that it gives you is a great feedback loop to say that your consistency and your discipline and your hard work is going to get rewarded. So the next time when you go at it, you know that it's going to happen eventually. So you trust the process a lot, right? Like the first time you do it, because this was probably the first time that I really gave like such a competitive exam. The results were, so much. The entire society, your family, everyone, you yourself are really looking forward to seeing that you succeed. And luckily I succeeded. And I think that just gave you that confidence, right? And then obviously the environment, the people you meet, the network you form, the friends you form, sort of feeds on itself to take you through it. So the same thing happens. Then you appeared for CAT, got through IIM. So then you get another sort of positive feedback loop that, okay, the process works. This is what I really need to do in my life. So at least now it's ingrained that if I have to achieve whatever I have to achieve, there will have to be a plan, there will have to be diligence, there will have to be consistency, there will have to be hard work, but then you will be able to achieve it.
So how would you say, how has the educational sphere altogether changed since the time that you went to college as opposed to what it is right now? That because we're living in a very dynamic environment wherein we are we have access to the internet, we have information on our tips, right, fingertips. So how do you think it has changed over this period, and at the same time what do you think about the importance of having an educational qualification when you're living in the 21st century right now?
Right. So I think, see, I also went back to college in 2013 to 2016 to finish law, or went to law college in Campus Law Center. So if I compare, like, it was almost like a decade difference between doing my MBA and going to law college. The difference is that now people are a lot more open in what they want to pursue, right? At a very early stage, I think it's great to see youth really knowing that these are the interests they want to pursue, right? So, for example, I was having a discussion with my nephew, and he was saying, "Oh, I think I want to be a psychologist." Now, this is not a conversation I used to have when I was in school, right? People were, it's not like psychologist careers didn't exist, but I think the idea that, you can go and choose whatever you really want to, and that there is money irrespective of whatever area you pick in, was not really there as much when I was growing up, right? It was very much like, oh, like in my family, everyone is either a doctor or an engineer. It doesn't matter whether they went into businesses afterwards. So in my family, it was like, oh, if you did not take science, it was like, really ridiculous. Like, how can you not take science? And I'm sure like it is the case in some other families where maybe you have to be a CA or you have to be XYZ things. So I think that has opened up, which is amazing, right? Because YouTube videos, people talking to each other on social media, blogs, etc. I think that really helps people get the information, and also people are able to make money by having different careers, right? So I remember when I was in law college, I had this friend. He was actually a pianist. So he was like, okay, I'm going to finish these degrees and I'm going to become a pianist. And I'm like, your parents are cool with it. He's like, oh, by the way, he used to already, play in a few hotels, in a few concerts, part-time while he was doing the college. And he's like, I can see that the money is there, right? And he went to certain international competitions as well. I mean, I know of zero people who could have become a pianist while I was, again, in college the first time I went to IIT. So that change is great. The change which has something which hasn't changed is the disconnect between what college teaches you and real life skills, I think is still large, probably is becoming larger, right? Like, I think the pace at which college curriculum is changing is super slow, and what real world, the change is very, very dynamic, right? Like you said, it's very, very dynamic. I think that gap is increasing, unfortunately. So to your question, that is college degree required? See, like college degree, I just say, like, since we are hopefully going to talk about crypto, the college degree is like I said, it's a proof of work, right? So the fact that I'm from IIT, the only thing that people can say is, okay, this person did the hard work, did the consistency. This does not mean that people who did not get through IIT did not do the hard work, etc., right? So the fact is that doing the hard work is a necessary but not a sufficient condition to get through IIT, right? So everyone who has got through IIT has definitely worked hard, but that does not mean that people who did not get through did not work hard, because there is luck involved, there is that day involved, there is your temperament involved. There are a lot of different factors, like there are different factors in success in life. So I think what the degree helps you do is to just give you a proof of work, to tell other people that, okay, there is a certain quality this person has, right? Is that directly correlated with your success? I don't think so, right? So it does not mean that if you are from an IIT or from XYZ college, you will automatically become successful. You will still need to do the hard work. You still need to find the area that you want to work in. You still need to have the discipline. What it does help you is that if other people also value that proof of work, maybe some doors will open faster than they will open if you did not have the degree. So I think in terms of that portrayal, that proof of work, opening those doors makes it easy. The hard work would still need to be put in. You will still need to get lucky to remain successful or become successful even after that.
So to your point, that your educational qualification may open doors for you.
Yep.
Right. So let's say if you're from IIT or IIM or let's say Harvard or MIT, right? You have that first movers advantage in the sense that people will recognize that you're from a very prestigious university or college, right? But at the same time, this will be your, let's say, a gateway to wherever you want to, whichever industry that you want to get into, right? But after that point of time, once you've gotten into that university, or like once you've gotten into that field altogether, right? Although you have that name tag, right, that you're from this particular university, you have to show them, that these are the skills that you require, even though like you may be from the top institution in the world. But at the end of the day, if you're not performing, you're like the market does not reward you, right? So this is like basically what having basically having an educational qualification means, right? That even though you have it, but you still have to work. You cannot be like okay, so you did this thing in college, now you cannot like just go out and relax. You still have to work every single day.
Oh yeah, absolutely. So I think your success, like I said, the correlation I've found, so there are a couple of things I'll say. The correlation to your degree and what actual success you have is not that, it's not that correlated. So this does not mean that you will definitely be successful if you're from IIT. Neither does it mean that the success is very tough if you're not from this place. So like you're absolutely right, you will still have to work very hard to get that success. And as I said, there are many factors including luck, which is a significant contributor to anyone's success, whether we like to admit it or not. That, at least from what I have seen for myself and for others, it is a factor, right? And it is something, now you can call it that these are factors not in your control, but whatever, you can put that in this bucket of luck, right? So that obviously plays a role as well. See, what I'll say is that whether we like it or not, the one thing I've realized is that no one ever asks you what school you went to, as in prior to your college, but for some reason your entire life, your college degree sticks with you, right? So for example, we are sitting here, I've graduated more than a decade ago, but we are still talking that okay, I'm from IIT, right? Like, and this is, by the way, not just in India, this is across the world, right? If you are from some of these colleges, like everyone wants to know where this person is from. So it doesn't matter whether it's the US, I've worked in UK for a decade, it doesn't matter where you are in the world, your college degree somehow sticks with you. See, over time what will happen is, and the reason is why it sticks with you is, to determine everything else takes a lot more time, right? So if someone comes and says, I'm a great coder, here is my GitHub project. Now, of course, if someone is going to hire you for a project, or you are an entrepreneur, or you are pitching your services, they will go check your GitHub and they'll validate and say, wow, this person is amazing, right? But the other person also would need to have the skill set to judge. Right now, like if you went and told 100 people right now in even a marketplace or even to hire, there will not be many who can look at a GitHub repo and judge what the code quality is or what that actually even does, or what the hell is even a GitHub. Right? Many people will be like, what is a GitHub? But the IIT degree is a very mass, simple thing for people to understand. So that's why college degrees have that value, because it's a abstracted, simple thing to explain to people. Everything else is tough, right? Like let's take the example of influencers also, right? So if you're a YouTube influencer, instead of a college degree, what you're known by is how many subs you have. It doesn't matter what your quality of content is, right? Maybe if your subs are, let's say 10K, which are also good because 10,000 people are subscribing to you. So a multiple of that, like maybe 40, 50, maybe even 1 lakh people are seeing your videos regularly. But suddenly if you have 3 million subs, the automatic stuff is, 3 million subs must be the better YouTuber than the 10K, right? Now the thing is that's definitely not true, right? Maybe the 10K sub is looking at a topic which is only concerned with 10K people, right? Maybe it's a niche topic. Maybe the 3 million is talking about broader topics, so it has a mass following. There could be many other reasons. Maybe there was 1 or 2 videos which went viral because of which they reached a particular stage. Maybe they had the resources to reach it, etc., etc. Unfortunately, the human mind is we want to judge things in a very simple manner, right? So what ends up happening is, so the same example is college degree is XYZ, good. Subs are XYZ, great. Your startup is another thing. Oh, your startup valuation is only 10 million. The other person's valuation is 1 billion. So the 1 billion company must be better, right? In a lot of cases, the founder of the 1 billion startup probably owns 10%, whereas the founder of the 50 million startup owns 100%. So it's like, and has full control, has the autonomy, wants to do it, but we will be like, unicorn, unicorn startup. So unfortunately, we gravitate towards some measures of success which are not which don't have the depth, right? So the same way, I know like people have this huge debate about IIT degree and non-IIT degree, but we have the same thing with unicorn startups, non-unicorn startup, subs of a channel that are there on YouTube, how many people following you have on LinkedIn. Like I remember, like there was a time when LinkedIn, people were like, how many connections do you have on LinkedIn was a thing, right? Like have you crossed, because LinkedIn shows 500 plus, so 500 was the first target. Then there was like, oh, if you got 30k followers, then you couldn't add, and people would just gloat about it on LinkedIn, right? Oh, so sorry guys, none of you can now join me because 30k has been achieved and blah blah blah. So we, numbers or some angle of showcasing our success, unfortunately, which is an incomplete picture, but that's how our mind works, right? It's the reality.
Yeah, and to your point that let's say a startup founder, he may be from one of the top institutions in the world, right? And at the same time, he or she may have raised multiple successful seed rounds, let's say 10 million, 50 million, 100 million, right? And at the same time, whenever that person is being talked about in media, the place that they have graduated from is always attached to basically, I think, to validate that okay, so because the second people think, okay, so this is $1 million startup or this is a $10 million startup and this person is from XYZ institution, that again clicks into your mind that that institution may have a lot to do with the success story that this person has become. But at the same time, there's a lot that, even though you may be from one of the top institutions in the world, there are a lot of skills that these institutions do not teach you, right? So I think even though you may you may have become a success story altogether, if the name of the degree is attached to what you've done, I think people give credit to your institution a lot. I mean, in a sense that people could give they are more inclined towards, okay, this person studied from MIT, right, and they've created the startup, so MIT may have a lot to do with the success behind that person. Or I mean, how
interesting point. So what you're saying is, I did not think of it that way. So what you're saying is that if someone from IIT achieves success, actually you're diminishing the role the person did, because you're like, oh, because he or she is from IIT, they got the success because the IIT got the success.
Yeah.
So see, what I'll say here is all our history and what we have done, right? Irrespective whether you studied from college A or B or C, the college plays a role, right? Your history plays a role. Your friends play a role. Your family plays a very big role. What you do also plays a role. So an individual's success is not just that individual, not his or her team, not his or her clients and customers. It's also your background. It's your support system, which is probably invisible, right? Like what your mother or father did, what your wife did, what your children maybe did as sacrifice, what your friends taught you overall in your life, what you did maybe a decade ago when the startup didn't even exist, all plays a role. But what you're saying is very interesting. I did not think it from that perspective, that you're saying that actually what ends up happening is, see, like people talk about both things, right? People love and talk about a lot saying this person is a dropout, right? So there are founders who are dropouts. It's probably become a little less cool to talk about this dropout thing right now. But there was a phase with housing.com, etc., where people were dropping out of IIT Bombay or other colleges, and there was this whole phase where it was a celebration that these are dropouts doing it, because a lot of people in the US did the same thing, right? So it was very cool to talk about dropouts. And now that I think about it, I think you're right, that if you were a dropout, it was more attributed that you created the success. And if you are a college graduate out of whatever college, you're like, you finished college, the success had to come because the college is great. Whereas the effort is the same, right? It doesn't matter whether you did the degree or not. Yes, certain people, and like I always say that I have been very lucky to be born in the family I was born into, etc. And some people do come from tough circumstances, and their journey and their hard work should definitely be more celebrated, right? So maybe in that manner, it is worth saying that people who dropped out, is great, but and that shows the conviction they had to not finish a degree. But yeah, it's interesting. It's interesting to see what you're asking. That how much role does the college has? Absolutely, it does. But everyone's college has a role, right? It's not just like it can't just be limited to either an IIT or an MIT or a Harvard. Every college plays a role in your success.
So after you finished your degree at IIM, and then you moved to London to work at like one of the largest hedge funds, and before that you were at IIT, right? So how did that switch from you being from a science background to working in finance work out for you, in the sense that both of the fields are different? So how was your experience like, and also how do people perceive hedge funds as what they are? If you could talk a bit about what hedge funds are and the overall experience that you had.
Sure. So what hedge funds do is they manage money for institutions, ultra high net worth individuals. These are people who have a lot of money to invest, where hedge funds are basically taking that money mostly on a discretionary basis, i.e. They tell the individual that these are the strategies I'll follow, and within that I'll make the investment decisions. So it's not we have to come and ask your permission. We take those decisions and we promise you the return. And then the beauty of the hedge fund industry is that they say that, listen, I'll take the part of the upside. So if you make money, I'll take 20% of the profits and 2% of your capital every year to have the privilege to manage your money. But if you lose money, then I'm not gonna take any of the losses. So as a business, it's a great business. It's a big responsibility to manage someone else's money, because I think I feel like when I manage my own money, I feel like I can take a lot more risk. But when you manage someone else's money, you have to be a lot more careful, because this is an added responsibility on you, because it's someone else's money, it's not yours, right? So now you are a lot more answerable if in case that money you lose it, right? So what hedge funds do is they analyze the market. I think the right way to say it is that we are the vacuum cleaners of the market. What it means is that financial markets, there are a lot of money being moved around, right? So different people are trading, industries are trading, institutions are trading. Let me give you an example of foreign exchange, right? So in foreign exchange, companies are exchanging money, because let's say you're doing exports to the US, you get dollars. Your employees are in India, so you have to convert it into rupee. So you are doing conversion. There are people who are visiting the US, so they are doing dollar rupee conversion. There are people who are from the US coming to India, they are doing the conversion. So between all these people doing the currency conversions, there are a lot of investment opportunities within, say, foreign exchange for a hedge fund to come and make money, because they are not sophisticated traders, right? They are doing it for the fact that there is a utility they have. And because of that, there are certain opportunities that are left, for which that's the reason why we are the vacuum cleaners. We go and we take up all those opportunities, right? And the best explanation that I had of a hedge fund was by the founder of Stark Investments, which was the fund I used to work in. And he used to say that, we are not only the vacuum cleaners, but we are picking up these opportunities in front of road rollers, right? Because these movements that are coming are big, right? And we are just trying to pick up these nickel and dimes very, very quickly before the road rollers run us over, right? So that's sort of the way to look at it. So you have to be very sharp. It's obviously a mix of a lot of analysis and a lot of scientific approach to it. There is obviously the art part of it that people talk about in investing, is that obviously in investing you have incomplete information, right? In the sense, I do not know what's going to happen in the future. Neither in my analysis can I wait for 100% of the information, right? At some point I would have to be like, okay, I have enough information to go ahead or buy this stock or buy this foreign exchange or short this stock or buy this mutual fund or go buy that company out, etc., right? So in that incomplete information, that's when you have to start over time trusting your process. It's the same way, like when you start preparing for an IIT JEE exam, you trusted your process to say that I can be successful, right? Which is why I'm doing the work. No one can guarantee that because you will work hard, you will definitely get the success. In the same manner, when you do investment, you can do all the hard work. There is no guarantee that you will make money. But over time, if you keep working hard, if you keep working right, if you keep working smart, you follow the right frameworks, you will end up making money. So that's the lesson you learn there, and in that manner, it is not that different, right? It's like science is a very framework-driven, analytical, education methodology, right? And so is engineering, and which is why a lot of people from science and engineering background move into finance, because the commonality is not about the material you have studied, but in the framework and the way your mind is trained. So your mind is pretty much trained that, okay, if I have to formulate or solve this problem, this is the framework I will apply. Okay, if this framework doesn't work, then I'll move to the next framework, then the next framework, then the next framework. It's done in a very methodical, you follow a certain methodology. Same in finance and investing, a methodology is really followed, right? And hence a lot of people make that jump, and that's why when I moved there, it wasn't like, obviously the underlying is different, right? So I had to learn what is a stock, like which we learned in an MBA, how do you trade derivatives, how do you trade foreign exchange. But I would say the thrill of it for me was really that it is at the end of the day like a game, right? Like the market is sort of the computer that you're playing with, and you do not know what it's going to do. You kind of come and you have a way to play the game. Sometimes you are successful, then you're like, oh, this is great, I'll do more of it. Sometimes you're not, so you go back, you understand what is it that you need to improve, and you kind of keep doing it, and there is instant feedback, right? So what I loved about trading was instant feedback, whereas in a lot of other places, like for example, in building a venture or your own startup, the feedback is an instant. It's a long process. But there are other sort of benefits in this creation, whereas in trading there is really no creation per se, right? It is truly like you're playing a game. Like you do the trade, you know whether it's making money or not, you decide what to do with it. Every instant you can do something. Here it's you have to take a much longer vision, a much longer time, and then trust your process to keep building it.
There's this. So when I talk to people who are basically investing in index funds, right? Index fund investors, they're always like, they love comparing hedge funds and basically the S&P 500 index fund or whatever index fund that they're investing in. And what they basically argue is that, no one can beat the market, which is actually like, which makes sense, right? No one can do it for a very long period of time. But at the same time, what I think, hedge funds are looking at things differently. They're not like, out there trying to beat the market. Even last year, like, there was this survey wherein only 3 hedge funds in the US, they actually beat the S&P 500, which actually grew more than 30% last year. So there were only 3 hedge funds that actually outgrew the S&P 500. So what do you think that, what do you think, do you think that, hedge funds altogether have a different purpose? They're not trying to beat the market because no one can do that in the long run. Sure, like, you can do that for like 5, 7, 10 years if you're like, the best of the best. But like, what do you think about that?
So see, the purpose of hedge funds is, the objective is that these are absolute return funds, right? And what does that mean when we say absolute return? Is that it should be uncorrelated, which means whether the stock market goes up or down, your performance is not linked to what is happening in the stock market. You should be making money irrespective of whether the stocks go up or they went down. So it's uncorrelated absolute return that you are going to get. Why is it advisable for certain people to invest in hedge funds? Is that you have to look at the entire portfolio, right? Like say if you only had 100 rupees, you're not going to advise someone with 100 rupees to say, for 50 rupees go and buy stocks, for 50 rupees go and buy debt. Like you'll probably not be able to do it. For 100 rupees, you'll say that it's not, maybe today you only have 100. So if you want to invest, do something safe, but just do one thing. But like for someone who has $100 billion, that's a lot of capital. Now in the 100 billion, they would want to have some stocks, some bonds, some real estate, some gold, invest in some venture capital funds, invest in some hedge funds. Why have a diversification? Because depending on what markets do, economies do, you should still be making money, right? So in an ideal world, even if during Corona as stocks went down, hedge funds should still give you 10% return. If stocks went up 30%, they should also still give you 10% return. So whether market went down by 30 or went up by 30, they should have given 10. So I think it's a wrong comparison to say, well, why didn't they beat stock market? Because that's not their purpose. Hedge funds aren't stock investments on steroids, right? Hedge funds are uncorrelated, diversified sort of asset classes, which is why my description was that we are vacuum cleaners picking penny in front of road rollers, right? So what that means is we are looking to make small returns, but that return is there because other people are not focusing on it, which is why it's uncorrelated, right? And that's what we are trying to do. We are consistently trying to pick that money up, etc. Right? So the idea isn't that S&P is up 30%, so I should be up 50. But then the reverse will also apply, right? If S&P is down 30, then we'll be down 50. That no one will be okay with. When people will be like, no, you can't do that. So that's what you're trying to give these absolute returns to the people.
And also to rightly as to your point, they're also, I believe that they are also uncorrelated because when we're talking about index funds, right? Index funds are mostly basically used by retail investors, right? People who do not want to get involved in the stock market. They don't want to do a lot of due diligence, right? And at the same time, hedge funds are basically for the people who have a lot of money with them, right? So I think even the audience or the investors involved in both of these markets are different. So the comparison should not make sense at all, because not only are they looking at the purposes differently, but the audience altogether, the investors altogether are different as well.
Correct. So I think that's a very good point. See, what I have seen is that a decade ago, when I used to talk to people in India, the only investment people wanted to make were FDs. Right? Of course, FD rates were higher, etc. Now, when you talk to people who are earning, the only investment people want to make is equities. Right? Neither is the right answer. Right? This does not mean that if you have money, first you wanted to be conservative, so you just did fixed deposit, and now you are just it's equity only, because neither the right comparison is only risk, neither the right comparison is only return. It has to be a balance, right? So Sharpe ratio, which is your return to risk ratio, is how you measure a particular asset class, which is to say that for the amount of risk I am taking, what is the return I am getting? Is that commensurate, right? And for most people, what has happened is that today people kind of feel like the equity, like property, has no risk, right? In most people's mind, before this last decade of what happened with the property market, people started saying, buy property because eventually though it will go up, right? Doesn't matter. But in the last decade, because it was either flat or went down, people were like, property investment right now, it's nobody even talks about buying a property anymore, unless you want to own your own house. I'm saying from an investment perspective, so many people don't want to buy a house. Whereas a decade back, everyone was like, as investments, just buy property. Now as an investment, it's equities, because over the last decade, equities have done so well, and every time they have gone down, if you bought, they have gone back up, right? So eventually you have made money. And what happens is that there is a recency bias, right? So we have a bias where whatever is the last recent data, we give it a lot more weightage, right? So for example, people said that when I used to tell them that property can go down, people will be like, nowhere in the world has that happened. By the way, in Japan, property has been in decline for 40 years. In Germany, up until recently, because now inflation has picked up a lot, property prices have been flat for 25 years, right? Inflation adjusted, they have not changed, right? In a lot of places, property has gone down. Overall, it has gone up, people have made money, and hence there is that confidence. The same has happened with equities. And maybe there will be a time when for a decade equities will not perform. Like NASDAQ, when the 2000 bubble burst, it took, I think, 15 or 16 years for it to overcome that, right? So it ends up taking a long time for people. So what people will have to understand is, A, what is the duration you are investing for? Like you rightly said, what is the purpose you are doing it for? If the purpose is that this is wealth, right, is the answer for most people today. Investment is wealth generation, right? I come from that background. I do not know of a single example of a person who became a billionaire by investing their own money, right? You can only become a billionaire, like people will say, no, Warren Buffett. Well, Warren Buffett became what he became because he's in the business of investing, right? Like at a point of time, stock investments was valued like, in the billions of dollars also. That was also the business of investing, right? It wasn't that Warren Buffett said that I have my own money and I will be, and he became worth $100 billion. So the idea of to look to wealth is to say, like for example, for me, my idea when I'm looking at whatever little money I have and when I'm looking to invest it, I am really looking at saying, can I first preserve capital, which means my returns need to beat inflation, so that like the capital is preserved in the monetary terms that are going to happen 20-30 years from now. After that, if I can make 2-3% more than inflation, that's amazing. The idea can't be that I'm sitting here and saying, my equivalent of 1 rupee, it should become 1 lakh, and I'm just sitting here invested in some stock and it has happened. Now yes, has it happened in equity? Yes. Has it happened in crypto? Yes. Does that mean we should take that as a norm and people start investing in them to say that, this is the only way I'll become rich? No. Right? Does that mean that you should have some money in gold, some property, some equities, some VC funds, some hedge funds, some crypto? Yes. If you have so much money that you can invest in all of these, great. But the idea is diversify, invest a little bit. Even though I am doing NFTs in crypto, that does not mean that people should be like, oh, all my wealth I'll do into crypto, because some XYZ I know made a $500 million off it. There'll always be exceptions, right? The average case is going to be wealth preservation.
So to your point, as you mentioned that people should diversify into a lot of different kinds of assets. At the same time, there's this notion that wealth creation, when you're first focusing on wealth creation, you should focus on specialization, in the sense that wealth cannot be created if you're distributed amongst different sectors, because they're all growing at different rates, right? So if you're looking at growing your money in terms of your wealth, how would you say that to like obviously it's different for each and every person. At the same time, what would be an ideal situation wherein people can basically first grow their money, in the sense that what I'm coming to is how much diversification could be too much diversification, and like to what extent should people let's say invest in, let's say, one asset class or two asset classes and then move after a point of time to different asset classes.
So I think that is definitely a function of the quantum of wealth that you have, right? So I would say that the lesser the money you have, you first just get into an area where can you get, like, whether that interests you. So maybe stock market investing interests you, and hence you know more about it, and hence your chances to make money or to understand at least what is going. So I would say, because you know about it, your chances to assess risk are better. Then maybe your chances to make higher returns are better. But at least till you understand the risk, you will then be able to understand that whatever return you are making is fine for the risk you are taking, right? And once you start getting more money, then your motivation to diversify to other asset classes should start increasing. Maybe then you can also take the help of other experts to help you in that diversification. However, my advice to people would be that there is again, I'm coming from a background of trading and investing for more than a decade, but my advice would be that if you had to put 1 unit of your own labor and work, put it towards where your highest chances are to increase your own value and wealth, right? Now, if that answer is that it is investing, then what you should be looking at is, how can I make investing my business? It could be that you could become a YouTuber and give advice to people and make that your business. It could be that you open an investment firm. It could be that you go and do a job in an investment firm. It could be that you open your own investment management firm yourself, etc., etc. But if you feel that you are really good at investment, then every marginal effort you put should be towards creating that business, because the amount of money you will end up creating in that business will surpass anything that your wealth returns would create, right? See, what I find a little bit difficult is when people are investing, and they should, because money shouldn't be sitting idle, there is a lot of passive returns to be made. So of course you should deploy your capital in the best possible way. However, I feel like a lot of people, and including some of my friends, definitely end up spending way too much time like in this investment world, right? So like I remember like some of my friends and even my cousins said, oh, I only spend half my time at work today and half my time in the stock market actively trading, because when the times were right, they were ending up making more money in investing than they were doing their jobs. But when the markets turn, they end up losing a lot more than they had even made. And that's the point, right? You cannot look at returns on even a year basis or 5-year basis only. Your vision has to be that if you're in your early 20s today, hopefully you're going to live for another 60 plus years, right? So your vision has to be that you're really building that wealth for that 60 years, right? Which is a really long time frame. So invest your money, have that passive return, but focus on creating value for yourself, which will end up making you a lot more wealth.
From working at one of the largest hedge funds to coming back to India and then starting multiple businesses, how did that take place?
So I came back. I went back to law school. I did law from Delhi University. Had a great time. I think probably one of the most fascinating courses. And I also think the average age of people in my college was a decade younger than me. So I was able to really connect with the next generation, and that really helped me a lot as well. Like I'm definitely determined that hopefully in the next decade I'll go back to college. I don't know what I'll do, but I really want that environment is something I really enjoy, right? And as I came back, or I actually, by the way, really considered becoming a full-time litigator, but the reality of law and my expectations out of it were different, so it wasn't for me. So I decided that okay, that's not the path I want to go to. My father is an entrepreneur. He has his own business, and I always thought that entrepreneurship is amazing. Even while I was in IIT, I had convinced 2 of my friends to start a company, but at that time we had the tech bubble, and anyway, when I was in IIT, starting your own company wasn't as much in acceptance as it is today. Thankfully today it is very accepted, so that's a great part. And a lot of my friends from my IIT and IIM are either in startups or have founded their own companies, right? So the environment around me was such that when I came back, everyone was like, starting a company is cool, this is so challenging, this is so much fun, these are the things we do day in and day out. So I was like, there is something to it. Like I want to see what happens, right? And obviously before you start a company, you feel that this is the way you can control your destiny, right? And so that urge to sort of take control of your own destiny was what drove me towards this path. So I actually started with a business of vaping and hemp, and vaping was growing a lot in 2016, and that was one of the first businesses we started. Unfortunately, India banned vaping in 2018 along with the US, and we started Totality also in 2017 with the first product being real money gaming, which was MGPL. So we were the first company to start a real money platform for mobile casual games, and we grew that to 2.2 million users and 400,000 daily active users. So it was quite interesting. I really wanted to do tech because I think there are 2 things which are extremely scalable. One is finance, the other is technology. And I've done finance. I think now with crypto, Web3, I'm able to integrate sort of these areas that I've done before. But gaming has always been my passion. So looking at a tech business where I could do gaming, real money, involve aspects of sort of money also with gaming was sort of what drove me to found Totality.
So you started your very first business, which was MGPL, right? Real world making. That was basically virtually you making money online by playing games, right? What was your very first interaction with crypto, and at what point of time did you think that I could basically take this space, the blockchain space, and create the same game that I created in the Web 2 space into a Web 3 space?
So actually my very first interaction with crypto was in 2011 when someone pitched me Bitcoin.
Okay.
I think at that time they were saying invest $10,000 for 5 cents a dollar. was the price being quoted. And to be honest, at that time I thought, I don't really get it. This is just like 5 cents felt like a lot of money, and I did not invest it. Right? I mean, theoretically, if I would have stuck with that, I would have been a billionaire now with just that $10,000 investment. So that was my first experience. There is a lot of FOMO coming from that time as well. Like, I'm sure it's for everyone who is in crypto. The right time to invest was 2 years ago, right? So the first time when we really started thinking about this area was actually in 2020, when we sort of went back and said, what is a new product that we wanted to build? And that's when we really thought about the metaverse, right? So I have been playing a lot of games, including Roblox, with my niece, who is based out of Canada. And that to me really showed to me that, gaming is where the next social network is. That's where the Gen Z and millennials are hanging out. And now people are not just playing games to finish a level or have bragging rights. It's actually just literally a place where you do social interaction, right? And it's very common for people to just come to gaming environments to actually interact with each other. That did not used to be the case when I was a gamer in my childhood, right? It was a source of entertainment, a source of escape, etc., etc. And we really felt that, the movement we could see in 2020 was that this decentralization or having your ownership and autonomy is very important. And blockchain gives you that ability. So in 2020, we decided that, listen, in August, we started creating Zionverse, which is, we said we'll create this decentralized metaverse for India. And we initially started experimenting with Roblox and Minecraft content to see if we could add a decentralized layer on top of it. So that is when we really got seriously into this business.
So before that point of time, you did not invest in crypto at all?
Yeah, before that time, I did not invest in crypto at all.
Okay. So then when you learned about blockchain and decentralization and crypto, and then you basically try to integrate the whole basically the Web 2 space to a Web 3 space, what were you what were the initial moves that you wanted made, and what was your vision for the next, let's say, 1 year, 2 years, or 5 years?
Okay, so see, with crypto, I think the utility part is something that everyone can understand, right? In the sense that, hey, does decentralization works, right? Does it have a lot of use cases? Yes. Does NFT, which is not just digital art, right? It's a technology layer for any personalized data. Will it have infinite use cases? Yes, right? So I think the trend of, say, ownership and autonomy has now been there for a decade, right? Like, if I draw a parallel, why have startups started sharing ESOPs and ownership with all their employees? Because they know by doing that, employees will be a lot more aligned to the goal of the startup, which means they'll work smarter, harder to achieve that goal, which means the company wins, then the employees being owners win as well. So it's a win-win scenario. Similarly, what crypto did is made it even more decentralized, that if instead of just having the ESOPs being given to my team, why shouldn't the ESOPs being given to the users, the other community players, make the, investors obviously already get it, but now we have this equal footing of whether you invest money or you invest labor or you invest your time, you are a participant in that ecosystem. Your goals are aligned to that community or that ecosystem, and hence the chances that ecosystem becomes large are much better, and it will be achieved much faster, which is why, to me, crypto was an obvious play. Where I think personally I took some time to understand is, where does this value derive from, right? So like Ethereum, Bitcoin, like particularly Bitcoin was at 3,000, went back down, went to 20,000, went back to 3,000, went to 65, 67,000, went back to 30K, now at 40K. This value driving and this volatility is what I had to really get my head around, to say that, how is this, for lack of a better word, how is this game being played in the crypto world, and what is the right place to enter into it, right? So for example, most of my non-Zionverse money in crypto, it is predominantly in Ethereum, right? So I do have 25 NFT investments which I made because I was entering into this. I bought a lot of NFTs in the secondary market. I participated in a lot of primary mints, primary sales of NFTs as well, because I wanted to understand that what ecosystem works what way, and also I had my own hypothesis which I wanted to test, right? By the way, like, out of my 25, only 4 are above my mint price, but they are 10x, 20x, so they have covered up for all the other losses.
So which one are the ones that have made you profit? If you can...
No, I don't see. What I don't want to do is I'll say something, then people will be like, okay, this is an endorsement of that.
Yeah.
I'm happy to discuss different ecosystems without saying which ones I exactly own. My Discord group knows some of them because my DP on my Discord is actually one of the NFTs I own, right? Which is non-Zionverse. I obviously own Lakshmi NFTs from Zionverse, etc. But non-Zionverse is what I'm talking about. In terms of tokens, apart from NFT, Ethereum is my main bet because I really believe in Ethereum. I also believe that decentralization and autonomy will have a cost, which is the gas fees that we pay for. I do think that that's going to become a little bit better as we do proof of stake. It's not going to come to the levels of layer 2 solutions, which is what people are doing. And see, the fact that a lot of us are gravitating towards layer 2 solution means that we still want the convenience and the low cost that centralization gave us, right? But the unfortunate part is that they are, the two sides of the same coin. You can either choose efficiency and low cost, or you can choose sort of autonomy and scale and decentralization. I think this was very well explained that, there is decentralization, there is security, and there is scalability. You can't really have all of it, right? So, and I think people are like, seems like still that we over-index on the cost aspect of it, which means that we are really talking about economies of scale, which means the best solution by definition will be centralization, right? So I kind of feel like the world we are building towards today is more like a Web 2.5 which will work. So whether that's layer 2 solutions that are getting popular, whether that's even examples of Solana, whether that's example of like us as a gaming company is also building a system which is on-chain, but it will be on-chain, off-chain very quickly, that where you have a lot of interactions, like for example in the game, it will be centralized, but wherever your data is stored, it will be on-chain, so that we give you that autonomy and ownership, right? So I think that's where I feel the value has to be understood. Utility wise, it has a lot of value. Valuation wise, it's still very dependent on obviously future value, which hasn't been realized yet, which is why it's so much more volatile, right? Which is why certain NFTs will, like I've seen a NFT project where as soon as we bought, the mint was done, it was sold out in less than a minute. It went up 10x, and within 2 days, it went down like 90+%, and now we are sitting at 10% of the original mint price.
Okay.
So we have even lost 90% from the original mint price, even though it went up 10x at some point of time. So like this crazy volatility is because there is a lot of speculation, and the speculation is because it's all about the future value, right? Which is we don't know what will happen.
So you mentioned about creating a metaverse by starting Zionverse. So first of all, what is Zionverse? And secondly, you talked about creating Lakshmi NFTs. So what was the underlying idea behind going with creating Lakshmi NFTs?
Right. So see, to me the metaverse, like I said, the reason we started this is the place that you hang out digitally, right? So this has to, when you talk about hanging out digitally, I should be able to do my social interactions, whether with individuals or people I know or other random people or communities that interest me. It should be that businesses are able to connect with their communities. It is the place where digital commerce can take place. So it's probably the other way to explain it is, it's the ultimate super app, right? So I can hang out there, I can play games there, I can do commerce there, I can buy things there. If I need to speak to ICICI, I can do that there and then do the transactions there, etc. Right? And we really wanted to build this for India. So our idea was that, look, I think that we form a connection with products or brand after we have a habit of using them, right? That's the natural way. So like in games, I think you mentioned before we started that you are a Clash of Clans player. I love Clash of Clans. By the way, we now have a Zionverse clan for Clash of Clans, because in the Discord community, since I've said I love Clash of Clans, they said, let's form our own clan as well, right? So, like, the more I played Clash of Clans, the more attached I got to Clash of Clans, the more attached I got to, the witch and the giant and all these players that now I have a habit of. So one thing I really wanted to do is, I wanted to create a place where I can feel that I belong here, right? Like, that attachment doesn't just come from playing it, but I feel like I belong here, right? And one of the things I've always felt is that in terms of these digital products that are being created, India, especially in gaming, we are just copying the West, right? So we copy the West or we use the Western products. The innovation that we have seen so far is regional, sort of, make it regional for the users in India, right? So it'll be the local app, or created for, instead of India, created for Bharat, because the first layer was, make it into the local regional languages. But like, the best way to explain it is that belongingness, that apnapan, right? Like, the best example I can give of it is, irrespective of how much pizza, pasta I have, if I see chole bhature, that is the thing that I really want to go for. Irrespective of jeans and t-shirt, very comfortable, great utility. But when I wear kurta pajama at the end of it, I feel that belongingness, that apnapan. Similarly, when you celebrate Diwali, the feeling you get is very, very different, right? So I really felt that, to create that, there are only two areas that we really attach to. It's either cricket or it's our culture and mythology. I am a very big fan of our culture and mythology. And my only question was that, okay, I'm a big fan of it. There may be some people like me, but how many people care about it enough, right? And what we discovered is that actually Gen Z and millennials care about it a lot. In fact, with this movement that we are having of, a little bit of nationalism, pride in what we are seeing more people getting interested in sort of our culture and mythology. And so far, it is limited to the TVs. Right, so it is really being built for our parents' generation, not for our generation or the Gen Zs or the coming generation as well, right? So we really wanted to have this Indian culture in an interactive format. So we built this entire content around Indian culture. So see, I have been talking. So now I'll come to Lakshmi NFT. I've been talking about metaverse and what we have been building since 2020. So I have some LinkedIn posts also, and I remember when I used to write about metaverse, people used to call me and say, I think you've gone crazy. Like, this is all this futuristic. You are just trying to think about this as an illusion. I think you have lost it. None of this stuff is gonna happen. And I was like, I think it'll happen. I'm pretty confident. Obviously, I'm putting my effort, money behind this. Don't know when it's gonna become the reality. Maybe we are early. Maybe we are not. Don't know. Obviously, when Facebook changed themselves to Meta in October 2021, overnight, everybody became a metaverse expert, right? And we thought that, okay, this is a good opportunity now that people suddenly are educated for us to do a launch to start building that community, right? And so that was around the time of Diwali. In Diwali, the goddess we pray to is goddess Lakshmi. So we said we got to do a Lakshmi NFT. And we also said that, the other thing we really wanted to show, apart from the fact that we wanted to do an Indian cultural NFT, is that NFTs are not just digital art, right? They will have a utility, you can make money out of it. So the way we built Lakshmi NFT is that this will be a way you can actually generate staking rewards. You obviously get a great 3D avatar of Goddess Lakshmi. In fact, Goddess Lakshmi has 8 avatars, and with Lord Ganesha, we had 9 gods and goddesses. Based on the rarity of the NFT you got a combination of them, right? And then after your 12 months staking reward period is over, you can actually convert to a playable avatar, playable NFT and a playable avatar, where you can actually access the Zionverse system with your unique avatar itself. So that was the other thing that we really wanted to communicate to the market. So even with our next NFT launch, which is Trimurti NFT, which will be going live on 20th April, what we are doing is that it gives you access to our governance token, Shakti tokens. It gives you staking rewards. You have a great avatar of either Lord Shiva or Brahmaji or Vishnuji. And later on, it will also give you a 3D avatar with which you can access Zionverse. So we are trying to communicate that NFTs are not just a picture of a bored ape or a monkey or a snake or something like that, it has a lot more utility than just digital art and collectibles as well. Yes, they have some value in terms of collectibles, but there has to be a lot more utility that we're giving to people.
So you talked about how you can stake your Lakshmi NFTs and earn rewards, and then you can also have playable NFTs. So first, how does a person who's owning that NFT, they can stake it, but how does the mechanism work on the back end, in the sense that how does the staking in work, where does the basically tokens, how do they generate, and how does that flow into the ecosystem to be able to deliver to the NFT holders?
So the way we did it with Lakshmi NFT is each Lakshmi NFT was sold for 101 USDC.
Okay.
So we took the US dollar coin and we did this through a partnership with Vault.
Okay.
So people had to open, if they did not have an account with Vault, they had to open the account. From their Vault, they had to transfer money to our Vault account for every NFT 101 USDC. We then took that money and we are investing it in market neutral arbitrage, liquidity providing, staking strategies in crypto, and we are earning those rewards, and we are giving a part of those rewards to the Lakshmi NFT holders, right? By the way, this strategy is not different from what Vault is doing for providing the deposit. After we have done Lakshmi NFT, there is another company called Pillow, which is funded by Elevation, which gives 18% reward. There are others which give 13% rewards, etc. They're all deploying sort of the same sort of strategy as well. All we are saying is that, look, we are not just a pure investment, neither we are pure digital art. The future, this convergence, is that you don't have to choose one or the other, right? So you can own something which looks great, you can game with it, and yet you can also make the rewards, right? So you don't have to choose one or the other, you can actually do sort of everything together, which is where I also see this integration of economics in the metaverse, right? So that's one of the things that I'm really, I really feel like metaverse will add a lot of value, where this social currency that we have, which is number of followers, my status, how I'm looking in my game, achievements I've done in my game, etc. And this monetary currency that I have to make money, returns on my investment, earn money, etc. We can now have this convergence and integration of these two economies, and that's what we are really going after, right? So it's like, for example, people do loyalty cards, they do gamification in education, people like Make My Trip are launching NFTs, people like Amazon are getting into content business, and the reason is that people who are doing businesses where it has goods and services know that you need to engage people. Businesses like Instagram and TikTok, where they are able to engage people, are selling goods and services because they know they need to make money, right? And and right now it has been very difficult. The great opportunity with tokens and NFTs and the metaverse is that this convergence and integration will be a lot more seamless, frictionless, and a lot more easy. And that's what we are really going for, which is why we did Lakshmi NFT and why we are doing Trimurti NFT in this particular manner.
Just a couple of more questions. So there are a lot of rug pulls and scams taking place in the whole NFT space, giving it a bad reputation and a bad name. Just a couple of months ago, even OpenSea faced the same issues, right? They were basically changing their contract and migrating. People had to migrate their contracts, and suddenly there was this phishing scam that took place. So how can people who are investing or who want to have that exposure to NFTs get into the market from that perspective, that they're not rug pulled or scammed, and at the same time what should be the ideal way of getting into NFTs? Because even if, let's say, if the project is not a scam or a rug pull, but there are chances that this is going to fail and people are putting a lot of money into the whole space. So what would that ideal way be to get into NFTs that way?
See, so first I'll look at rug pull and then I'll look at chances of failure, because they are two completely separate things. So obviously in a rug pull, the entire part was done so that you can raise the money, and these guys raise money and they just want to go. Predominantly happens when these projects have anonymous or anon sort of teams, right? Now, this is not to say that all anon teams are like that. Some anon teams are doing great work, but obviously if there is no connection with the team in real life, that trust factor that what are they actually doing is less, if they don't have other backing, other people doing due diligence, then that trust factor is a little less. And by the way, this is again a role that VCs end up playing, right? Which is they are doing the due diligence, and if you have that due diligence done by professional investors, other investors can come in and piggyback on that due diligence to say, okay, these guys have done all the work, they have been doing it for decades. So if they have done the work, then at least this risk of people running away doesn't exist, right? So that's the rug pull part. The other part I'll say is the failure part. Look, this technology is new. There'll be a lot of failures. Like I said, a lot of us are trying ideas, a lot of us will keep trying these ideas. They will bound to be failures. In any innovation, any technology change, failure, like we are doing experiments, like let's be real, a lot of us we are still experimenting. We do not know how this Web3 will play out. So the failures are bound to happen. They have happened in Web2, they have happened in Web1, will happen in Web3. The only thing I will say is that the answer is diversification. Like if you want to invest 100 units in crypto or NFTs, don't invest in one project. Diversify a little bit. Some of these projects will work, some won't work. If you are very convinced about a particular project, then the assumption is that you are happy to take that risk, that you have done enough due diligence, enough research to get comfortable with the risk, and you have enough money to say, if it works, I'll make a lot of money. If it doesn't, then I can survive that fall. No one likes losing money, but at least you can survive that loss, right? And so the way to look at the NFT projects is first learn, right? Like be curious, learn from different channels, like what you are doing here, learn from other YouTubers, read a lot of blogs, join the community of these projects, right? So if the project is good, they will have an active community. If they have an active community, not only is the team interacting, the community itself is interacting with each other on a regular basis. And hence you will get to know what are the chances, right? Because at the end of the day, unless the community grows, the project is never going to succeed, right? There could be some cases where the community grows and for other technical reasons, the project ends up failing. That could also happen. But community increase is a necessary condition for the success of the ecosystem. May not be a sufficient condition, right? So interact with the community, do your research, and if you then feel comfortable, invest in it.
My final question is regarding the crypto tax that has been implemented right now in India. So 30% in crypto tax that people who are investing in crypto or trading in crypto, they have to bear once they basically make a trade or they cash out, right? So how do you think this is going to affect people who are involved in the crypto community, not just from a standpoint of traders, but also from the standpoint of crypto entrepreneurs, blockchain entrepreneurs?
So see, I think this taxation is definitely a very conservative step by the government, in my view, right? So they have just I also did not like the portrayal that, hey, we are taxing because we can tax, right? And it's the highest amount of tax that can be done. There is no offset of losses if it's a different currency, so on and so forth. Now, the conservative approach, the positive of it is the government definitely has some genuine concerns, which are genuine. Should they be concerned that black money is coming into crypto? Yes. Should they be concerned that these scams are happening? Yes. Should they be concerned that small investors can come and lose their money and there should be regulations? Yes. But instead of addressing these concerns, what we have done is right now we have said, oh, so many people are making so much money. Like there was this recent speech in the parliament where they said, oh, the CAGR is 150%. So the answer is, oh, because people are making a lot of money, let's tax them, right? Okay. But if you tax them, can we at least get these regulations so that these concerns which are genuine are addressed, right? Then at least people can say look, we have taxed 30%. The chances of rug pull has gone down. The chances that small time investors lose money has gone down. Then at least because you are giving up on some amount of your return which is substantial, right? You're at least reducing the risk. That could have been justified. By just the fact that we are taking away tax and not giving those benefits, I feel like that's a little unfair. How does it affect the entrepreneurs? Obviously it will affect the community. It is affecting the community. We know crypto exchanges volumes have gone down. It will affect the amount of money that could flow into NFTs, metaverses. Hence, the amount of money that will flow two ecosystems will reduce, hence the motivation of entrepreneurs could go down. The other part is, and the other larger issue, I think is, see, Web3 is not going to stop, right? US has legitimized it, Dubai is going after becoming the Web3 center of the world, and actually even today, India is best placed to become the Web3 capital of the world, right? Like US took the lead in Web 1, China took the lead in Web 2, we can still take the lead in Web 3. We have the developers, we have the community and the consumers, we have the entrepreneurs, we have the investors, we have everyone in this ecosystem to create it. Now what is happening is, by government not forming these rules, taxing without giving the benefit of it. So if you want to tax, right? Like for example, income tax in Scandinavian countries is very high, but their unemployment benefits are there, etc. People are okay to pay that because they know that overall they're also getting the benefits, right? So it isn't just a question of one part of the equation, we have to look at both the parts. If you want to tax 30%, please get the regulations so that Rugpull is less. We get, like they have done with Aadhaar and with India Stack for UPI, etc. Do something with crypto stack so that people have a way to get crypto wallets easily. The technology is something that people can trust. Entrepreneurs can build much faster. Then I think it's justified, and we can still be the Web3 capital of the world. The way we are going right now, my fear is what will happen is Web3 movement won't stop, consumers won't stop. What will end up happening is a lot of money will flow out, right? So like we already know of tons of Indian startups which have based themselves out of Dubai. I know more people are doing that, unfortunately. And if we end up in this regulation that we have, we may see more of that, which will only harm what is happening in the Indian Web3 system, whereas we can still be the leaders. So I really hope that the government sees that and they, adopt policies to promote us to become the leaders in Web3 rather than sort of again the laggards and only the outsourcing like we have been doing for decades now.
I mean, we can talk about this endlessly, and I really wanted to talk a lot about this whole space, but since we are we don't have enough time, I would really thank you for being here. I appreciate you. I appreciate you for being here and sharing what your experiences, what you are building, and I really hope that a lot of listeners of our podcast, they are able to understand metaverse, NFTs in a much better space, in a much better way, and definitely I think this will really be helpful to a lot of people. So again, thank you for being on here and sharing what you're doing.